Section 36, subsection 1, clause 9 says that if the assessee is a company, so this deduction is available only in the case of company assessees. Okay, any other assessee cannot claim this deduction. So only a company assessee can claim the deduction if that company has incurred expenditure on promoting family planning amongst its employees. So among its employees, the company wants to promote family planning. So to promote family planning, okay, some expenditure is incurred. That expenditure can be revenue in nature and it can be capital in nature, meaning some asset can also be bought, okay, other than land and building. Other than land and building, any other asset is bought. So any revenue expenditure 100% allowed, and even the capital expenditure is fully allowed, but this will be allowed in 5 equal annual installments starting from the year in which such expenditure is incurred. Okay, so there are 3 places in the PGBP head where the deduction is available in 5 equal annual installments. Number one was preliminary expenditure, second was VRS compensation, and this is the third one. Okay, so just remember this much. No need to get into the details of this section. Whatever revenue expenditure incurred by the company to promote family planning amongst the employees, that will be fully allowed as a deduction, and whatever capital expenditure is incurred, even that capital expenditure is fully allowed, but the allowance will be in 5 equal annual installments. Okay, now see, as far as this capital expenditure is concerned, now on this, depreciation on such capital expenditure will not be available because you are claiming the cost under this section, and deduction of this capital expenditure under any other provision is also not allowed. Okay, and last but not the least, proviso to section 43(1) will also be applicable. 1, 2 and 3. 3 important points you are supposed to remember. Okay, proviso to 43(1). Do you remember what is proviso to 43(1)? This capital expenditure is nothing but cost of the asset, actual cost, paid in a day to a single person, and the amount is more than 10,000. If paid by way of any mode other than prescribed mode, then that much amount, that much capital expenditure will not be allowed as a deduction under this section. Okay, sure? Okay, now pay attention. Do you remember we have taxable business incomes 10 lakhs minus what we do? Minus we do business expenses 8 lakhs. then we get profit of 2 lakhs. Out of this profit, we first take the deduction for depreciation under section 32. Example, depreciation was 40,000 only. So some amount will remain, that is 1,60,000. Now out of this, the next deduction will be deduction for capital expenditure on scientific research under section 35. For example, that amount was 1 lakh. And after claiming this 1 lakh, 60,000 remains. Out of this, we are supposed to reduce 1/5 of capital expenditure on family planning. For example, the total expenditure incurred was 5 lakhs. Capital expenditure on family planning total was 5 lakhs. So entire 5 lakhs will not be allowed. 1/5 of 5 lakh, that is 1 lakh. So for example, that 1 lakh we claimed as a deduction over here. So now negative 40 will remain. The negative 40 which is remaining, you cannot call it business loss, to be adjusted as per 70, 71 and 72. You cannot call this as a business loss. Rather, this will be treated as your unabsorbed capital expenditure on family planning. And what will be the treatment? Treatment same as, fill in the blanks. Same as what? Unabsorbed depreciation. Done, no? See, now in your asset, now in your business, there will be few assets which will be used in your normal business operations. On those assets, the cost will not be allowed fully. On those assets, you are going to claim what? Depreciation. Understanding? In your business, there will be some assets which are used for scientific research. So in the same business, there are some assets used in normal operations. You will claim depreciation on those assets. In the same business, there will be some assets which will be used for scientific research. You will claim their cost fully. And in that same business, there are some assets which are acquired for promoting family planning amongst its employees. So 1/5 of that cost will be allowed here. Okay. So whenever you try to take the deduction for cost of the assets, that is always out of the business profits. Yes or no? But business profits are after claiming deduction for all the revenue expenditure. So all the business expenses which are written over here. Yes or no? This. Don't you think that this revenue expenditure which is allowed, will be allowed fully from here. And the capital expenditure which you are claiming, no, this capital expenditure. See, this is allowed here, 1/5. Got it, sir? Sure. So this was 36 subsection 1, clause 9. Okay. Now, coming to the next part. Next part is 36 subsection 1, clause 15 and clause 16. Both the clauses we are going to do together. Okay. First of all, pay attention. If you are an assessee, you can be any person now. Now, you are engaged in, you are doing transactions of buying and selling. Transaction of buying and selling of shares or securities. Now, if this transaction of buying and selling security if these transactions result into income taxable under the head PGBP. So buying and selling of shares and security resulting into an income, and that income is taxable under the PGBP head. So when buying and selling of shares will be treated as your PGBP income? Come on, tell me. When will you say that buying and selling of shares is your PGBP income? Come on, tell me first. So wait, the shares and securities are bought and sold. See, what did I say? If there is an assessee, he is doing some transactions of buying and selling of securities and shares, meaning that he is into the business of buying and selling of shares and securities. So for him, the shares and securities will be a stock in trade, which is buying and selling. So he is into the normal share trading business. Or can I say, he can buy and sell the shares and securities under his speculation business also. So buying and selling transaction will result into PGBP income. That PGBP income can be normal PGBP income as well as speculation PGBP income. It can be any PGBP income, yes or no? Because buying and selling of shares by taking the delivery will result into normal PGBP income. But buying and selling to get the profit by just price fluctuation will give you another PGBP income. But that PGBP income will be speculation PGBP income, yes or no? But ultimately the buying and selling transactions are resulting into what? Your PGBP income only. Now these buying and selling transactions which are resulting into PGBP income, these transactions are entered into on a recognized stock exchange. So you are doing these transactions on a recognized stock exchange, for example BSE, for example NSE. So where you are buying and selling your shares, BSE, NSE, etc. So that is a recognized stock exchange where these transactions are happening. Now, whenever these transactions will happen on recognized stock exchange, you will have to pay STT. What you are going to pay? STT means Securities Transaction Tax. So this tax you have to pay at the time of buying also, and this tax you have to pay at the time of selling also. So can I say now this securities transaction tax is a tax which is on those buying and selling transactions which are resulting into PGBP income? Hello sir. So what they are saying that this STT will also be treated as your business expense now. Whatever STT you have paid on these buying and selling transaction will also be treated as your business expense. Getting my point? So claim the deduction for this STT also. So they are saying that claim the deduction for this STT also. So this STT will be allowed under section 36 subsection 1 clause 15. This STT will be allowed as a deduction out of this business income which you are getting. No, out of this business income you can claim the deduction for this STT also, because this business income is resulting out of these buying and selling transaction, and on this transaction whatever taxes you have paid in the form of STT result into your business expense only. Claim it as a deduction. Go. Understood? Sure? But wait, sometimes your buying and selling of shares or securities may result into capital gain, because the shares and securities are not bought as your stock in trade. You are not in the share trading business. You are not in a speculation business, meaning that you had some money, extra money, which you have invested in shares. You have bought the shares means you have invested in the shares. And now after a few years, you will be selling those shares as your investment when the money will grow, when the shares value will grow. Yes or no? So that time, the resulting income will not be taxable under PGBP. That time the resulting income will be taxable under the head capital gain. So on such buying and selling transactions, which is not resulting into PGBP income, the STT will be paid. but that STT will not come here as your business expense. That STT will go to capital gains, because the buying and selling transaction resulting into your capital gain income. On those buying and selling transaction, whatever STT you are paying should also go to capital gain side. Understanding? And under the head capital gains, it is not allowed as a deduction. Even though you take it under capital gains, but it will not be allowed as deduction over there. That we will discuss with capital gains chapter. Don't worry about that. Okay. But right now, did you understand this much? Now pay attention here. What if the transactions of buying and selling are for commodities? So sometimes you buy and sell commodities like gold, crude oil, then agricultural commodities. Okay, so there are many commodities which are frequently bought and sold. Just like shares, just like there is a share market, there is a commodities market also. Just like there is a recognized stock exchange, there is a recognized commodities exchange also. So whenever you have to buy and sell those commodities are bought and sold on a different different exchange. That exchange is recognized commodities exchange. So on the recognized commodities exchange, you are buying and selling commodities. And at that time, on the recognized commodities exchange, you are going to pay CTT, commodities transaction tax. Even this commodities transaction tax will be allowed as a deduction under section 36 subsection 1 clause 16. It will also be allowed, provided the buying and selling transactions of commodities result into your PGBP income. You are in the business of buying and selling commodities. So whatever income will arise on buying and selling of commodities, you are going to charge under the head PGBP. So on those transactions, whatever CTT you have paid on a recognized commodities exchange, even that will be allowed as a deduction. These two deductions are also done. Will you remember? Sure? Okay. So with this, section 36 is over. Now we are going to section 37. See, section 37 subsection 1 says that any expenditure which is not a personal expenditure, not a capital expenditure, which is incurred wholly and exclusively for the purpose of business or profession, not covered under section 30 to 36(1). Not covered under section 30 to 36(1). If you have any such expenditure, then that expenditure shall also be allowed as deduction under section 37(1), general deduction. So now in your business or profession, there are many expenditures which you can incur. So now we are not identifying those expenditures that okay, this specific expenditure, this specific, no, all the expenditures we are covering here only. Okay, but those expenditures should not be of personal nature. They should not be of capital nature, meaning they should not be capital expenditure. They should be revenue expenditure. Yes or no? And they are incurred wholly and exclusively for the purpose of your business or profession, meaning that you are incurring these expenditure Hence, you are able to do business or profession. Or you are doing business or profession. That is the reason why these expenditures are incurred. If you are not doing this business or profession, these expenditures you might not incur only. Yes or no? So, wholly and exclusively in connection with your business or profession. And please remember, if you have already claimed this expenditure under section 3236(1), because any of those sections talks about this expense, then claim it under that section. No, don't bring here. But if that expenditure is not covered under 3236(1), then it is your business expenditure. We are going to give you the deduction for that business expenditure also. Claim that business expenditure as a deduction out of your PGBP income. Yes or no? Few examples. Give. Come on. You only tell me what type of expenditures. Think that you are doing a business or a profession. In your business or profession, whatever expenditure you can incur, think about that. But remember that expenditure should satisfy all these conditions. Advertisement expense, distribution expense, transportation, okay? Any other expense? Loose tools, meaning those repairing tools and all, no? Okay, yes, correct. Then you are buying stock in trade, purchase of stock in trade. Ayo, very important. Then marketing cost, advertisement cost, electricity expenses, employee salary, the benefits which you are giving to your employees in the form of perquisite, in the form of allowances, all those expenses, leave salary of your employees. Then there are n number of expenses which you can commission. Yes, very good. Then so in short, if you see any expenditure, no, these are the few examples which we discussed. Okay, no. If you see any expenditure, ask that expenditure these 4 questions. Are you a personal expenditure? No. Are you a capital expenditure? No. Are you incurred wholly and exclusively in connection with business or profession of the assessee? Yes. Are you covered by section 3236(1)? No. Then most welcome, you are allowed. From the business income, that expenditure will be reduced. 37(1) done. Examples. Salary to staff. Then transportation and freight charges. Administrative expenses, electricity charges, purchase of stock, purchase expenses, then commissions paid, etc., etc., etc. One more I will write. Commissions given, advertisement expenses, etc., etc. Okay. Now pay attention. This is section 37(1). Now there are 3 explanations to section 37(1). How many explanations? 3. Explanation number 1. To section 37(1). This explanation 1 says any illegal expense shall not be treated as incurred for business or profession. If you have incurred any illegal expense, no, we will assume that it is not incurred for business or profession only. Even if even if you prove it that it is for business or profession, but we are explaining in advance only that we will assume as if it is not incurred for business or profession only. So even if all the four conditions are fulfilled by this illegal expenditure, even if you prove it that it is incurred for your business or profession only, but explanation one says that we are going to assume that it is not incurred for your business or profession. Hence, that illegal expense shall be what? Disallowed. That is, it cannot be claimed as deduction in the form of general deduction. Getting my point? It will be completely disallowed. For example, if I am giving bribes to government officials to get a contract for my business, so that bribe which I am giving, that is not my personal expense. And by the way, I have to every now and then frequently give these bribes to different government officials. So this bribe for me, it is a regular happening expenditure, not a capital in nature. It is a revenue expenditure which I am incurring. Every now and then I'll be giving bribes to different officers. So this is what? This is a revenue expenditure for me. And see, this bribe, no, I'm giving for the benefit of my business. Only after giving the bribes, I'm getting contracts in my business. Hello? So only and exclusively incurred in the connection with my business. And go and check 32, 36, 1. Nowhere the bribes are covered. So general deduction? No. You'll try to claim general deduction, but explanation 1 will stop you. It is not included for business or profession. Hence, it will be disallowed. Any type of illegal expense, meaning that expenditure, doing such type of expenditure is treated as some offense, is treated as illegal activity. Even if all the conditions are fulfilled, still it will not be allowed as a deduction. Giving bribes to government officers, purchasing drugs, etc. These are illegal expenses. Getting my point? Giving some ransom to someone, to giving ransom, or it might be giving some money to some gundas, giving some money to some bad people to kill your business enemies. All these expenses are illegal in nature. These are not allowed under law. So these will not be allowed as your business expense because it is treated as if it is not incurred for your business or profession. Yes or no? So this was your explanation number 1. Now coming to explanation number 2, to section 37(1). So what this explanation says? It says that amount spent as an expenditure on CSR activities. Have you heard about CSR? Corporate Social Responsibility. CSR activities. As per section 135 of Companies Act 2013. Now, if that amount spent as an expenditure, if that amount spent is allowed as deduction under a specific provision, then claim as a deduction under that provision only. Yes or no? For example, companies are supposed to spend money on CSR activities. So there are many CSR activities which are prescribed under the company's CSR rules. Okay. So on any of those activities, if you are spending money, meaning that you are incurring money on CSR activities, you are spending money on CSR activities. Now, out of certain CSR activities and the amount spent for that, there are specific provisions under the Income Tax Act. So that particular expenditure will be covered by that specific section only. So don't worry. If certain specific section of the Income Tax Act covers that expenditure, so claim it as a deduction under that section only. For example, if I tell you that you are making donation to certain notified institution, so contributing or donating to certain notified institutions is allowed under section 80G. So claim that amount as a deduction under 80G. That is a CSR activity which you are doing. CSR activity says that if you can't spend money on your own, do one thing, at least donate. Donate to certain notified institutions. So if you are donating to certain notified institutions, we will consider as if the money is spent for CSR activity only. And for that donation also, under the Income Tax Act, you are going to get deduction under 80G. Then claim that amount under 80G. There are certain approved scientific research institutes, scientific research associations, etc., to whom you can give the donation. So even that is covered by CSR activity. CSR activities in the list, it is given that if you cannot spend on your own, do one thing. Give it as a donation to certain institutions for scientific research. For that, you are going to get a specific deduction under section 35. So there is one specific provision under the Income Tax Act. If that provision covers this particular type of expenditure, then that expenditure will be allowed under that specific provision only. But what if that amount spent is not allowed as a deduction under any specific provision of Income Tax Act? Come on, tell me. Then the same cannot be treated, cannot be allowed as general deduction under section 37(1). And the reason for this, amount spent as expenditure on CSR activities, this amount is not an expenditure but the same is appropriation of profits. Appropriation of profits, because certain percentage of net profit is to be spent on that CSR activities. So once you will calculate your net profit, then if I'm not wrong, it is 2 or 5%, any one of these percentage. It is 2% or 5%. 2%, no? 2%. So it is 2% of your net profit. So once you calculate your net profit, 2% of your net profit you take and you spend on CSR activities, meaning the amount which you are spending, and you are saying that it is my CSR expenditure. But that, my dear friend, is not your CSR expenditure. Expenditure comes before profit. And if some part of profit is used for CSR activity, that is not expenditure, that is appropriation of your profit. And 37(1) allows you the deduction for what? It allows you the deduction for expenditure. How can you bloody claim something as expenditure under section 37(1), which is per se is not an expenditure only? Getting my point? Hence, as per explanation 2, any amount spent on CSR activity as expenditure will not be treated as amount spent as an expenditure for the purpose of business or profession. Even that will be disallowed. If it is not allowed under any specific section, then you cannot claim it under 37(1) by saying that this is my general expense, because it is not expenditure only. It is appropriation of your profit. Getting my point? So if that amount spent is allowed, friends, if that amount spent is allowed under specific provision, then claim deduction in that provision. Yes or no? But if that amount spent is not allowed as deduction under any specific provision, and you want to claim that amount under 37(1), then same cannot be allowed as general deduction under section 37(1). Why? The reason is the amount spent on CSR activities is not expenditure only. It is what? Appropriation of profits. Getting my point? Will you remember this? Should I move ahead? Third explanation. Now coming to explanation number 3 to section 37(1). Now what this explanation says? This explanation 3 covers 3 things. Number 1, amount spent for any offense or amount spent means expenditure, okay? Expenditure for compounding an offense or the amount is given to any person who is not legally allowed to receive such amount, then whatever amount which is given, whatever amount which is spent, all these amounts are not treated as incurred for purpose of business or profession. Hence they will also be disallowed. They will also not be allowed as a deduction. So if there is an offense, to do that offense you are spending money and saying that give me the general deduction. The amount which you are claiming as a deduction under section 37, first of all, that amount should not be an illegal expense. Spending that money is allowed, but it is done for offense. Offense means something wrong. Meaning you are giving money to someone to kill someone. Killing someone is an offense, no? So to do that offense, you are giving the money. Or for example, you are giving some money to some company person who is an insider of the company to give you the tips about that company so that you can buy the shares. That is also an offense. So to do some offense, you are spending money. Getting my point? That amount will not be treated as incurred for business or profession, disallowed. Sometimes when you are caught in an offense, so you go to jail, but to avoid that jail sentence, you can give the money as a fine, as a penalty, meaning that you are compounding your offense. Compounding of offense means what? For some offense, if you are about to go to jail, to save yourself from going to jail, you can pay fines, heavy fines and penalties. Okay? So that you don't go to jail. So what you are doing? You are compounding your offense. So the money spent for compounding your offense is also not treated as spent for business or profession. Getting my point? Now you can give money to someone. For you, it is allowed to give that money. But the person to whom you are giving that money, legally that person is not allowed to accept such kind of money. Giving bribes to police people is an illegal expense because giving bribe is illegal. So you cannot give that amount. You cannot give that amount because it is illegal. You cannot spend money on offense. Okay, no? So that is already going to get covered under explanation 1 or explanation number 3, first part. But we are right now talking about that amount which you are allowed to give. It is not illegal for you to give that amount. You can give. It is not illegal. But the person to whom you are giving it, no. That person cannot take that amount from you. If that person takes that amount, it is illegal for him to take that amount from you. Getting my point? So even if that amount which you are giving to that person, legally allowed, you can give, but still we will consider that it is not incurred for your business or profession because the person to whom you are giving that amount, he is not legally allowed to accept that amount from you. Best examples are doctors and pharma companies. Pharma companies can pay an amount to a doctor to motivate him to prescribe our medicines, which the doctor cannot accept from the pharma company. So pharma company will say, see, it is the lookout of you and the doctor department. But to increase our business, increase our sales, we are supposed to spend that amount. And if the doctor is taking that amount, what we can do? And to increase the sales in our business, to increase the turnover, we'll have to go and catch these kind of doctors who are going to prescribe our medicines only. Under the Indian Medical Association regulations, which are applicable on a doctor, doctor is legally not allowed to take any such type of benefits or money from the pharma companies to prescribe their medicines to their patients. He is always supposed to write down in the prescription the formulation of the medicine which he is prescribing, keeping the decision on the patient that which company medicine of this formula that particular patient wants to take. So you just prescribe the formula, which formulation of medicines you are prescribing for the treatment of this disease. At the most you can give 2 or 3 names, but you should not be saying that go and buy this medicine only. Okay? And if you are doing that in your prescription by taking an amount from a pharma company, prescribing their medicines, it is not allowed to you. Getting my point? Disciplinary actions can be taken against you. Pharma company is going to spend that money for the purpose of business only. For pharma company giving such type of perks, benefits to the doctors, 6 days, 7 nights package to Dubai for the next 1 year, prescribe my medicines, my multivitamins to your patients. So whatever disease he is coming with, prescribe multivitamins of my company. Getting my point? So doctor taking that benefit or doctor taking money to prescribe such medicines, is not allowed for a doctor. Not allowed for that doctor, but for pharma company it is allowed. But pharma company giving this type of money, pharma company cannot take the deduction as per explanation 3. Getting my point? Sure, this explanation 3 was inserted 1 year back, Earlier it was not there. But now this is also made as a part of section 37(1). Will you remember this? Sure? Okay, very good. See, all these things we have done. 36 subsection 1 clause 7 done. Then after clause 7, we have done clause 9 also just now. Then clause 15, 16 also done. Now 37(1) we are doing right now. Okay, no? 37(1). This was your explanation number 1 we have already covered. Explanation number 2 already we have covered. And explanation number 3 also we have covered. Okay. Now, read this part. And just tell me whether you know this or not. All the deductions we have covered from 30 to 37(1). These are the few things which you can reduce out of your business income to calculate your profits. Chargeable under the head PGBP. So what is chargeable under PGBP? Profits and gains. To calculate profits and gains, you take the incomes of your business minus 30 to 37(1), whatever we have written, minus. Only these things can be reduced. But wait, adjust your losses also happening in the course of your business or profession. These losses adjustment will happen by default, because without adjusting these losses, your profits cannot be calculated only. So there is no specific section which tells you to adjust these losses. You have to adjust these losses not as per the provisions of any sections, but you have to adjust these losses as per common sense. I've already told you earlier. Yes or no? So if there is a common sense, you will know that charge is on what? Profit. And bloody the profit which I am charging under the head PGBP cannot be my correct profits if I am not adjusting these losses incurred in the course of my business or profession. So I have to adjust them. Even if there is no specific provision, these losses are by default adjusted. Okay? Will you remember? Don't ever try to claim them under section 37(1). Don't ever say that these losses are allowed as deduction under section 37(1). Why, Because 37(1) purely tells you that it is going to allow the deduction for expenditures. And this is not your expenditure. So you cannot claim it under section 37(1). But don't worry, still it will be allowed. Because without adjusting them, your profits, true or correct profits of business cannot be determined. So they have to be adjusted. Getting my point? So few example of these type of losses I have already given you. Yes or no? Then the second part of the chapter is over. Meaning deductions are over. Now we are going to do what? Disallowances. Third part of the chapter. See, the first disallowance is section 38. And believe it or not, we have already done this. Section 38. Any expenditure or depreciation of the assets will be disallowed to the extent which relates to the use of that asset for any purpose other than business or profession. Meaning that only that expenditure or depreciation of the asset will be allowed under the PGBP head, which is relatable to that use of the business, that use of the asset, which is for the purpose of business or profession only. If the entire asset or for the full year the asset is used only for business or profession, then full amount of expenditure, full amount of depreciation on that asset you can claim under PGBP head. Yes or no? But what if some part of the asset is used for personal purpose? Then whatever expenditure or depreciation which relates to that part, which is not used for business or profession, which is used for personal purpose, will not be allowed as a deduction under PGBP. That will be disallowed. Where it is written? Section 38, which we have already discussed earlier also. Everyone. Now coming to 37 2B. Any expenditure for advertisement in newspaper, magazine, brochure, pamphlet, etc. of a political party that is known as political donation or contribution eligible for deduction under GGB or GGC will not be treated as your business expense, will not be allowed as a deduction from PGBP income. Disallowed. Second disallowance you understood? Hello sir. If you are doing advertisements in other newspapers, other magazines, other brochures which are not belonging to a political party, yes or no? Those type of normal advertisement expenditures you can claim as a deduction, general deduction. Sure, sir. Now, sometimes for advertisements, no, you can incur capital expenditure also. Sir, how come capital expenditure? See, you have a shop. Outside that shop, you have placed a big glow signboard. You have fixed a big signboard outside your shop. Signboard, it can be a painted board depicting your name of the business, depicting the products which you are selling, yes or no? Or it can be a light board also, glowing at night with different colors lights. So neon signboard, glow signboard, or the signboards which are affixed, or even you can go and buy a hoarding itself, a big hoarding. You bought that entire hoarding only. Now tell me, these type of expenditures you are incurring to advertise your business or profession only, or to advertise your goods only or services only in which you are dealing into. But tell me, are these type of expenditures incurred on a frequent or a regular basis, or sometimes only? Every month will you change the glow signboard, or it is fixed once and will be used for number of years? Every month are you going to buy that hoarding, or you buy it once and use for many years? Yes or no? So whatever amount you are spending here, even that is also your advertisement expenditure. Getting my point? Even that is also your advertisement expenditure. But that expenditure doesn't happen on a regular basis. It is not a revenue expenditure. It is a capital expenditure resulting into a new asset coming into existence. And what is that new asset? That hoarding, that glow signboard, yes or no? That signboard coming into an existence, which will be now used in your business or profession for long period of time. So that capital expenditure which is incurred is what? That capital expenditure which is incurred is asset. Entire cost will not be allowed. You claim it in the form of depreciation. Proviso 243(1) will also be applicable. Hello? You cannot claim it in any other way. You will have to claim it in the form of depreciation only. And which type of asset this is? Come on, tell me. Is it an intangible asset? No, it is a tangible asset. Tangible land? No. Building? No. Furniture and fixtures. This is known as fixtures. So in the block of furniture and fixtures, it will be shown. Getting my point, everyone? Eligible for depreciation at 10%. Sure. So this was your advertisement expenditure disallowed under section 37 2B. Which type of advertisement expenditure is disallowed under 37 2B? Which is incurred for advertisement in newspaper, magazine, brochure, pamphlet, etc. of a political party. That will not be allowed as a deduction under PGBP head because it is not treated as a business expense. It is treated as what? Donation or contribution to political party, which can be claimed subject to satisfying those sections, can be claimed under 80 GGB or 80 GGC as the case may be. Other advertisement expense you claim, but they should be revenue in nature. You can claim them under 37(1). But capital expenditure on advertisement you cannot claim under 37(1). That will result into asset. Got it, sir? So this was your disallowance 38 and 37 2B. Now coming to section 40, 4040. Under section 40, no, there are two clauses which we are supposed to do. Under section 40, we are supposed to do two clauses. 40 clause A and 40 clause B. Under 40 clause A, we are supposed to do 40 clause I, meaning 1, 1A, 2, 40 clause 3, 40 clause A, subclause 4, and then subclause 5. You won't believe I have already covered this and covered this with you. 40 clause A, subclause 2. Any tax on profits of your business or profession paid by you cannot be treated as your business expense, will be fully disallowed. 40 clause A, subclause 2 already done. 40 clause A, subclause 5 also I have done under PGBP head. Employer take this car, employer take this accommodation, take your domestic servant also. These are my non-monetary benefits. Government is valuing 2 lakhs, charging tax. Take these things, give me 2 lakh rupees. Do you remember such example which I gave? It was that only. So for your employees, if you are paying what? The tax on their non-monetary perquisite, any tax on the non-monetary perquisites of your employees is your expense. But 40 clause A subclause 5 says that it will not be treated as your business expense. It will be disallowed while calculating your PGBP income. And I gave you the logic also at that time why it is disallowed. You will ask your employee that how much is your non-monetary perquisite. Employee will say 2 lakh rupees. Oh, on this 2 lakh, how much tax you are supposed to pay? 20,000. Don't worry, I will pay. I will pay your 20,000. Give me 18,000 back. Do you remember same example with same numbers I gave you? So you are anyways going to get back 18,000 from your employees only. And now you will be spending 20,000. Meaning 2,000 extra only you are spending, no? But you are going to claim the deduction for the entire 20 if this 20 was allowed. And that would have allowed you to save tax on that 20,000 rupees which was allowed. So if that 20,000 was allowed from your business income would have been reduced by 20,000. Meaning on that 20,000 you would have saved 30% tax, 6,000 rupees tax. By just giving away 2,000, even if you are able to save 6,000 of your tax, still you are under a benefit of 4,000 rupees. Everyone will start doing it then. Getting my point? So what the government says, what the law says, any tax on the non-monetary perquisite, non-monetary salary of the employees paid by the employer will not be allowed as a deduction in the hands of the employer under the PGBP head because it is not treated as a business expense only. Disallowed. 40 clause A, subclause 5 also done. Now, if we do subclause 1, no, trust me, copy paste. So you have to understand clause 1, subclause 1 properly. Then subclause 1A and subclause 3 will be just a piece of cake for you. It will be very easy for you. Understanding? So I will now first discuss 40 clause A. Subclause 1. We call it 40AI. In order to speak properly, we call it what? 40AI means what? 40 clause A, subclause 1. Okay. So 40AI says that if you are an assessee, you can be any person. Now you have incurred any expenditure for your business or profession other than salary expense of your employees. Other than salary means all the expenses which you are incurring for your business or profession. It can be commission, it can be interest, it can be royalty, okay, it can be rent, whatever type of expense. It can be professional fees you are paying, it can be technical services fees, etc. you are paying. It can be any amount of expense other than salary expense. So in your business, many expenses are happening. Out of all the expenses, exclude salary. Other than salary, any other expense. Now for these expenses, you are making what? Payment. You are making the payment of these expenses. Now this payment you are making, no? You are making this payment outside India to anyone. If the payment is made to anyone outside India or to a non-resident or a foreign company. So either you are making the payment outside India to anyone or you are paying to a non-resident or a foreign company. And the payment which you are making is towards the business expense only. So any expense which you have incurred in the course of your business or profession, for that expense, you are making payment outside India. Or you are making that payment to any non-resident or a foreign company. Remember that payment should be for any expense other than salary expense. Yes or no? Now, for you, this expense, this amount paid by you, this payment is expense for you. But don't you think that this expense for that person who is outside India, for that person, it is their taxable income in India. So they are earning taxable income. Hello, from India. On that, they are supposed to pay tax in India. They means any person who is outside India or a non-resident or a foreign company to whom you are making that payment. That person is earning income from India. Indian income they are earning. On that income, irrespective of their residential status, they are supposed to pay tax. So amount paid by you to them is an expense for me. Sorry, is an expense for you. Out of your expense only you are making that payment. That payment is an expense for you, but that same payment is a taxable income in their hands. Yes or no? On that they are liable to pay what? Tax to the government of India. Are they going to come to India to pay tax on that income? Or can the government go there to collect these taxes? That person to whom you are making the payment is sitting in Australia. So you are making payment to Australia. Hello? Non-resident foreign company is in USA. You are making the payment to them in USA. So will that person from USA or Australia, will he come to India to pay that tax? Okay, we are earning a business income. We are earning a income from India. That is our Indian income. We are going to pay tax on that income. Okay, so we have earned the income. In the next year, we are coming to India and we are going to pay tax. Are they going to say this ever? They will never be bothered to come and pay tax on that income. Neither are government and the officers. See, the income tax department cannot send their officers to Australia or USA to collect the tax on this Indian income from them. Those officers are never going to come back. Even if they are allowed to go there, They're not going to come back. US government will only, take them in the jail. That bloody your country's income tax, you collect in your country, no? Why have you come to our country to collect your income tax as per your Indian law in the territory of USA, in the territory of Australia? You will not be allowed to send your officers there. Getting my point? And it will ultimately affect the relations between the two countries also, no? So, but sir, this fellow is earning income. Neither he is going to come, nor the officers can go. So, the assessee, who is the source of the income to that person, you are only the source from where he is getting the income, no? Indian income. So why don't you at the source only deduct his tax? We are going to tell you. So don't give him full amount of money. Don't give him full amount of income. Rather, from that income, deduct some tax. How much? We will tell you. When? We will tell you. Okay? These all things you will learn in TDS chapter. Hello, sir. So Kaushik, you understood, no? It was TDS only. So TDS, who will deduct? This assessee will only deduct out of the expenses, out of these payment for expenses which is making to a person outside India or to a foreign company or to a non-resident. Yes or no? No. Nothing like that. Son getting income from that business. How come? No. I am an independent party in India. You are outside India. For example, you must have given me some loan. On that loan, I'm giving you interest. So that interest is my business expense because that loan which I have taken from you is what? Is my business loan. So I have taken a business loan from you. On that, whatever interest I'm going to pay you is my business expense, for which I'm going to get the deduction under PGBP head 3613. Remember, interest on business loan. I'm going to get the deduction under 3613. But wait, I am going to get that deduction provided now I fulfill the TDS requirements on that payment, because the government wants me to deduct the tax on this payment which I am making, because for me it is my payment, but for the opposite party it is an income. On that income the government wants to collect tax, but the government cannot collect directly from them. Government cannot go there. They will not come to India to pay. So who is the link between them and the government? You are only the link between them and the government, no? So government will catch you. Let us say the source of his income in India is you only, no? So do one thing. Assessee, you are given a responsibility. To deduct the tax on this income. Hello, whatever payment you are making to them, okay, no, which is an income for them. So you have a responsibility, number one, to deduct tax, meaning TDS, on such payment which you are making outside India, or you are making to a non-resident or a foreign company. Yes or no? On such payment, out of your expense, whatever payment you are making, on that entire payment, you are supposed to deduct TDS. Will you deduct? How much? When? Those provisions we'll learn later on. But you have to deduct as per the requirement of the government, as per the TDS provisions. Now, once you deduct, will you keep that money with you? Or it's government's money? It is government's money out of his income, which you are deducting, because you are only going to give that money to him. So the money which you are going to give him, the income which you are going to give him, in that income, his tax is 10,000. The money which you are going to give him is 1 lakh. 1 lakh is his income. Out of that 1 lakh income, government tells you to deduct 10,000 rupees of his income in the form of tax which he is going to pay on that 1 lakh. Yes or no? And deduct that 10,000, then deposit that 10,000 to the government. Getting my point? So first responsibility is to deduct, and the second responsibility is to deposit such TDS to government account within how much time? On or before the due date of filing ROI of the previous year in which such payment is made. Yes or no? So if this is an expense for 24-25, so we want you to deduct TDS in 24-25 only. We want you to deduct TDS in 24-25 only. And deduct in 24-25 and deposit also in 24-25 only. But don't worry, even if you are not depositing on or before, you have deducted in this year only. Yes or no? Deposit also in this year. But even if you are not able to deposit in this year, no, don't worry. The tax deducted in this year can be deposited on or before the due date of filing your ROI for this year. Then also TDS compliance is made. Yes or no? So TDS compliance will be made only if you deduct the TDS and then deposit that TDS on or before the due date of filing your ROI. Then only the payment which you are making to that person, by deducting and depositing the TDS, whatever payment you are making, that payment will be allowed as your deduction. That payment, that expense will be allowed as your deduction. Yes or no? But wait, we are not here to allow. We are here to disallow. Now tell me, when this payment will be disallowed? If on this payment, whatever TDS which was required to be deducted in this year, you did not deduct that TDS. So whatever payment you made, on that payment, if you fail to deduct TDS, entire payment, 100% of that payment on which TDS you have not deducted, will not be treated as your business expense for this year, will be disallowed. Full amount will be disallowed in this year. Getting my point? Hello, sir. But wait, have you deducted TDS? Yes, sir. But have you deposited that TDS on or before the due date of filing your ROI? No. Meaning, now TDS is deducted, but the amount which you have deducted at TDS could not be deposited in this year, and it could not be deposited till the due date of filing your ROI. Then this is also a TDS default. TDS default will arise twice. Once the TDS is not deducted only, then also it is a TDS default. Yes or no? And two, TDS is deducted, but you are supposed to deposit that TDS also on or before the due date of filing your ROI, which you could not deposit. Then on whatever payment you have deducted the TDS, but you fail to deposit on or before the due date, that entire payment as per 40AI will be disallowed. Okay, so your responsibility was to deduct and deposit. You did not deduct only. Forget about deposit. It is a TDS default. But you deducted. Then default will be if you fail to deposit on or before the due date. Then also it is a TDS default. So responsibility is this. Now, what will be the default? Default in fulfilling above responsibility, meaning what we call it? We call it TDS default. What is this default? Come on, tell me. No TDS deducted in the relevant previous year. Yes or no? Or TDS is deducted in the relevant previous year but not deposited in this year also, and also till the due date of filing your ROI. Got it, sir? Got it? Now for this default, there will be disallowance. And for this default also, there will be disallowance. So under section 40 clause A subclause I, they say that such payment, meaning which payment? The amount of payment on which the TDS was not deducted. Such payment. 100% of such payment disallowed. Yes or no? Here also 40AI will be attracted. And as per 40AI, such payment means what? The payment on which you have already deducted TDS, but you did not deposit that TDS on or before the due date of filing your ROI. Such payment, that entire payment, 100% of that payment will be disallowed. That will not be treated as your business expense for this year. Will you remember? Now, it was your mistake. So you are getting a punishment. Punishment what you are getting? That amount is not treated as your business expense only. The amount on which TDS default is done. I am not saying that entire expense. Hello. Expense can be 10 lakhs. On 8 lakhs you deducted TDS properly. But out of that 10 lakh, on 2 lakh you did not deduct TDS. Or on that 2 lakh you deducted TDS, but you could not deposit on or before the due date of your filing your ROI. Then how much is the amount on which the TDS default happened? On the 2 lakh rupees. That entire 2 lakh will be disallowed. Getting my point? Not the entire 10 lakhs. So out of that 10 lakh of business expense, now this 2 lakh of business expense will not be allowed. Because on that 2 lakh of business expense, you have committed this default at the time of paying that 2 lakh. Getting my point? Hello, sir. Sure, sir. What about the balance 8 lakhs of your business expense? On that also, if the TDS default is there, no, even that will be disallowed. But fortunately, on that there was no TDS default. Whatever TDS was supposed to be deducted, you have deducted also, and you have deposited on or before the due date of your ROI. 40AI will not be attracted in that case. Now wait, whatever amount which was disallowed, see, this amount was disallowed, no? Under section 40AI, this amount was disallowed. Now, this amount will be later on allowed. Whatever amount disallowed right now because of TDS default, whatever amount is disallowed right now, later on that amount will be allowed. Later on allowed in that previous year in which TDS is deducted and finally deposited. Still the amount will not be allowed in the year of deduction, tax deduction. The amount will be allowed as a deduction in the year in which the tax is deducted and deposited. So in the year in which the tax is actually deposited, in that year, now whatever amount which was disallowed right now, no, whatever amount which was disallowed right now, that amount will be later on allowed in the year in which TDS was actually deducted and deposited. Now tell me, whatever amount which was disallowed right now, whatever amount which was disallowed right now under 40AI, on that TDS was deducted but not deposited. Hence that amount got disallowed right now. It will be later on allowed in the year in which the TDS is actually deposited. Sure. So the payment, this amount which was disallowed, later on allowed in that previous year, in which TDS deducted is previous year in which, in which deducted tax is finally deposited. So this is also in the year of deposit. This is also in the year of deposit. This is written in proviso to section 40AI. This proviso says that this amount will be allowed as a deduction. This will be allowed as a deduction. But 40AI says that what is disallowed. Proviso says that what is disallowed will be later on allowed. Okay. Will you remember this? Sure. Now pay attention. Who is this? I will do some changes with green color. Huh? Wait. I will do the changes in green color. If you have understood this part, so now you just have to remember the changes. Okay. Now this section will become 40A IA. Assessee can be any person. Yes. Incurred any expense for the purpose of business or profession including salary. Now salary is not excluded. Including salary. Yes or no? Any expense, and that will cover salary also. Now the payment for this expense is not made outside India. That payment, here this is change, here this is change, here that payment is made to any resident assessee. Any resident assessee. You are an assessee. You are incurring any business expense including salary. But now for that business expense, you are making a payment to a resident. Resident can be ROR also, it can be RNOR also, but that person to whom you are making the payment, no, that person should be a resident. That's it. No matter where he is located right now, he must be a resident. Okay. So to any resident, you are making the payment, and on that payment, you were also supposed to deduct TDS on that payment also. Because the payment which is given by you to this resident is a taxable income for that resident also. And the government says that we don't trace these type of residents very fast. Though, even though they are in India only, resident meaning that they are in India only, no? Even though they are in India, but they don't come in our hands very fast. They are not traceable. So where we are going to find them? And finding them will be a very time consuming task for us. By that time, they will spend their entire income. No income will remain to pay taxes to us. And my dear friends, there are many persons who are residents to whom you only are giving the income. So instead of going to every resident and asking for tax on their income, why don't you only deduct that tax for all those residents and give it to us? No, it will be an administrative convenience for us. Collection of the tax will become easier for us. And there will be no tax evasions also, because even if they will run, no, the TDS is already deducted and you have only given that TDS to us. Getting my point? So we will not have to run behind many people asking for tax on their income. Our efforts will be saved. Asking for tax on their income from 100%, is it better? Or asking for the tax on their income from the person who is giving them the income, is it better? The person who is giving them the income. Because now we'll have to catch only one person. That why you have not paid their tax, why you have not deducted their tax and paid it to us. And even if we try to catch those 100 people, there are bright chances that we are able to recover the tax only from 30-40 people. Hello? But if we give you the responsibility, you will be able to collect the tax from all the 100 people. Yes or no? Tax compliances will be there. If we run behind those 100 people to collect the taxes, our tax collection charges will be more as compared to the tax collection. Getting my point? So don't make us run behind those people, no. They are earning taxable income from you, no. Give them their taxable income after deducting TDS. Deduct TDS and deposit that TDS on or before the due date of filing your ROI. This is what is your responsibility when you are making the payment to resident. Hello? Understanding? Now, tell me one thing. Can there be a default? You are making the payment to resident on which you were liable to deduct TDS. You did not deduct. Default. So on whatever payment which you have made to that resident, on which you did not deduct TDS, yes or no? Hello? 100% of that payment? No. Only 30% of that payment will be disallowed as per section 40 clause A subclause IA. Only 30%. Not the entire payment. Take the deduction for 70% of the payment, but we will disallow 30% of your payment. Getting my point? Because payment made by you is what? Income for them. Assuming that on that income they would have paid 30% tax to us, which they are not giving. So we will disallow that from your business income. Getting my point? We will disallow that amount out of this expense which you are paying them. It will pinch you if we don't allow the full amount. If we disallow 30% out of that. Meaning that now you will be proactively deducting that TDS. If you have paid 10 lakh rupees to that person, 3 lakh out of that will be disallowed, will not be treated as your business expense. Only 7 lakh will be allowed as a deduction if you have not deducted TDS. What if another default is happened? TDS 3 lakh you have deposited, deducted. But you did not deposit that 3 lakh on or before the due date of filing your ROI. Then that entire 3 lakh, then that TDS was supposed to be deducted on that 10 lakh. On that 10 lakh, you are supposed to deduct some TDS. For example, you are supposed to deduct 5,000 rupees only. How much you were supposed to deduct? Only 5,000. And you deducted also 5,000. So now pay that 5,000 to us, no? On or before the return filing due date, pay that 5,000 to us. You have not paid that 5,000 tax deducted. Then on that entire 10 lakh payment which is made by you, on which you deducted the tax and you fail to deposit on or before the due date of filing your ROI, out of that amount on which you have already deducted TDS, the amount on which you have already deducted TDS, forget about the TDS amount, but the amount of expense, amount of payment on which you have already deducted TDS, no, forget the amount of TDS. Have you deducted TDS? Yes. So that TDS deposit to us, no, on or before the due date of filing your ROI. You have not deposited that TDS to us. Hence, we will disallow entire 10 lakh? No, 30% of 10 lakh. To get that TDS from your pocket, which you have now deducted and kept in your pocket. This is not small sin. This is a very big sin which you have committed. Not deducting TDS is okay. But deducting TDS by taking the name of the government and not depositing to the government is a very big thing. Getting my point? So tell me one thing. Here also 40A IA will be applicable. 40A IA will be applicable, and as per 40A IA, the payment on which you have already deducted TDS, but that TDS you could not deposit on or before the due date of filing your ROI, that entire payment on which TDS was deducted, which you could not deposit, hello, on that entire payment we will not disallow. Out of that payment, we will disallow how much? We will disallow 30%. Getting my point? So if you have understood the first clause, no, what is the difference between first and second clause? First clause, clause I and clause IA, what is the difference? So that was 40 clause A, I, and this 40 clause A, IA. Very good, very good. Second difference, any expense covered other than salary there, but here any expense including salary. That payment for that expense used to happen outside India or to a non-resident or to a foreign company. Here they are saying that payment happening to any resident, wherever the resident is, the payment is happening to a resident. Now that payment which is happening to a resident on which you were supposed to deduct TDS, you did not deduct that TDS. So whatever payment without TDS you have given, no, that entire payment, no, 30% of that will be disallowed. If it was paid outside India or to a non-resident or a foreign company, then that entire payment would have been disallowed. But since the payment is made to a non-resident, entire payment will not be disallowed, only 30% we will disallow. Yes or no? Now, on this payment to the resident, you are supposed to deduct TDS and deposit that TDS to the government on or before the due date of filing your ROI. Did you deduct TDS? Yes, you deducted. But you have not deposited that TDS on or before your due date of filing ROI. Then that entire payment on which TDS deducted but could not be deposited, that entire payment will not be disallowed. Only 30% of that payment will be disallowed. Now later on, when you actually deduct and deposit the TDS, in that year, the 30% which was disallowed, no, will be allowed as a deduction in that year. In the year in which TDS actually deducted and deposited. Or the payment 30% which was disallowed. Why? Because that is 30% of that payment on which TDS was deducted but could not be deposited. Now deposit that TDS after the due date. Whenever you deposit that TDS, then the 30% which was disallowed right now will be later on allowed. This is a proviso to section 40A IA also. Understood? But for this, you need to know that what are the payments on which TDS is supposed to be deducted, when TDS is supposed to be deducted, how much TDS is to be supposed to be deducted, what are the threshold limits, to what extent the TDS is not deductible. All such things you must know, and that you will know in the chapter TDS TCS. But wait, we have few questions here in PGBP only, which requires you to have the knowledge of that TDS provisions. So if you have the knowledge of those TDS provisions, then only you are going to be able to give the answer to these questions in PGBP. Because first, you should know that whether you are liable to deduct TDS or not. For that, TDS provisions you should remember. Now remembering that, applying the TDS provision in the question, now you will come to know whether you were liable or not. For example, you were not liable. You checked the TDS provision. In the given case, you checked the TDS provision and you came to a conclusion that TDS is not to be deducted. And you have not deducted. So no problem. That was your business expense. Allowed. Nothing will be disallowed. Hello, sir. But after checking the TDS provisions, you came to know that, okay, in the given case, if I'm checking the TDS provisions, as per the TDS provision, in the given case, I was supposed to deduct TDS. But shit, I did not deduct the TDS only. Then, the payment on which you did not deduct TDS, 100% disallowed or 30% disallowed. Hello, 40AI, 40IA. Depends that what type of payment it was and to whom that payment was made. If the payment was made to resident, then 30%. And if made to any other person, then if made to a non-resident or a foreign company or outside India, then 100%. What if, looking at the case, you came to know that TDS was deductible? You deducted also, but you could not deposit on or before the due date of filing your ROI for this year. Then also, that payment or 30% of that payment on which TDS is deducted but cannot be deposited will be disallowed. Will you be able to do it? We'll solve few questions, now you will come to know. Okay? Sure? Now pay attention. I will write down something in front of you. Expense. Okay. I'm saying TDS deductible in previous year 24-25 only. This you will have to check the TDS provisions. You will come to know that, okay, in this year you are liable to deduct TDS. So, are you liable to deduct TDS? Yes. In which year you are liable to? 24-25. Because the expense is for 24-25. So, on that expense, you are supposed to deduct TDS in 24-25. Okay, no? Hello, sir. Now tell me, TDS deducted or not? Yes, sir. TDS deducted in same previous year. 24-25 only. And that TDS deposited in. The TDS got deposited in that same previous year itself. Now tell me, will there be any disallowance under 40A or IA? No, because TDS for this year, which was supposed to be deducted, it got deducted in this year only, and it was deposited also in the same year. Is there any TDS default? No. So if there is no TDS default, no disallowance, so that payment on which you deducted TDS without any default, hello sir, will that payment be allowed? Will that payment be allowed? Yes. In which year? In the same previous year, it will be allowed. No disallowance will be made. In the same previous year, the payment will be allowed. Sure, sir. First case understood. Let's come to the second case. TDS deducted in previous year 24-25. Deductible in 24-25. It actually got deducted in previous year 24-25 only. But you deposited that in the next previous year, meaning previous year 24-25, sorry, 25-26. But on or before due date of ROI for previous year 24-25. So whatever was the due date for 24-25, on or before that due date, the TDS got deposited. It got deposited in the next year. But next year it got deposited on or before the due date of filing ROI of this year. Yes or no? So is there any TDS default? No, no TDS default here also. Same to same. Whatever written above, copy paste. No disallowance. This should happen. What did I say? This should happen. Now see, now the default will fall. Now the default will come. Copy and paste. Now pay attention, very important thing. Now tell me. Payment allowed in previous year 24-25? No. In previous year 24-25, what did I say? In previous year 24-25, 40 clause A, I or IA will be attracted. Will be attracted, meaning that the payment on which you have already deducted the TDS, but you fail to deposit on or before the due date of filing your ROI, that entire payment or 30% of that payment will be disallowed in this year. Can you claim that amount of disallowance again as a deduction later on? Yes, proviso, but it will be allowed. The amount which is getting disallowed right now in 24-25, that entire amount which is getting disallowed right now will be later on allowed. But it will be allowed in the year in which the TDS is actually deposited, because it is already deducted. So tell me now, in which year it is actually deposited? 24-25 only, sorry, 25-26 only, no? So now in previous year, 25-26, next previous year, the proviso will get attracted. Proviso to 40AI or 40A and according to this proviso, in the previous year 25-26, now the expense, now the amount which was disallowed here, now it will be allowed in this year. Got it, sir? Got it, sir? The amount which got disallowed will now be allowed in this year. Sure, sir? Should I move ahead? Next one. TDS deductible in 24-25. Did you deduct in 24-25? No. In that year it was not deducted. Then if the TDS was deductible in that year, you did not deduct, what will happen? In that year, this disallowance will be attracted or not? Come on, tell me. duplicate. This disallowance will be attracted, meaning that in 24-25, now that payment on which the TDS was not deducted, that entire payment or 30% of that payment will be disallowed in 24-25. Hello, sir. Hello, sir. Now you know when this actually deducted. You actually deducted it in previous year 25-26, meaning next year you deducted. So will it be allowed in next year? The year in which the TDS was deducted? No! The year in which the TDS was deducted and deposited. Now you are going to see that when that TDS was deposited. What if it was deposited in the same year? Now proviso will be applicable. It will be allowed as a deduction in 25-26. But what if that TDS got deposited in 26-27? Then proviso will be applicable. But the deduction for the amount disallowed will be allowed in 26-27 because the TDS was deposited in that year. Hello, sir. Now tell me, can I say in the same year, in previous year 25-26 only, the TDS got deposited? Now, if you go and see that before the due date of filing ROI, on or after, after the due date, don't see here. You are going to see that only if the TDS was actually deducted when it was supposed to be deducted. Yes or no? Actually deducted in 24-25? Yes. Then deposited on or before the due date of filing ROI of 24-25? Yes. Then only you can say that it is allowed. No disallowance is attracted. But if it was not deducted only in that year, hello, if it was not deducted only in that year, the amount already got disallowed in 24-25. Now it will not make any difference that when you are deducting and actually depositing, you can deduct and deposit on or before the due date of filing your ROI. You can deduct before the due date of filing your ROI, but you can deposit after the due date of your whenever you are depositing and deducting will not make any difference now. Please remember, if the TDS for this year could not be deducted in this year, the payment on which it was not deducted, entire payment or 30% of that payment, please disallow in this year. Now please check when this TDS was deducted. Okay, next year, very good. When it was deposited, they will deliberately tell you on or before the due date of filing ROI. No need to check the due date of ROI also now. If it was deducted in the next year, now please check when it was actually paid. The year in which it was actually paid, in that year the proviso will be attracted. Yes or no? So for example, if it was paid in previous year 25-26, deducted in 25-26 and also deposited in 25-26. Now it can be deposited prior to due date, on or after due date will not make any difference. Hello. Proviso will be attracted. Proviso will be attracted in that same previous year in which it was actually deducted and deposited. Done. Now pay attention. This amount which was disallowed now will now be allowed in this previous year. Sure. Why? Because the amount was deducted in this year. No. Amount was deducted and deposited in this year. Hence, it is now allowed in this year. The amount which was disallowed is now allowed in this year. Got it, sir? Please remember this. Please. Very important discussion. And you will come to know when we are going to solve the questions. No, that time only you will come to know that how they will twist the things. They will also merge the TDS provisions. Don't worry. Things are easy for us. Okay. When we'll solve, no, we'll commit mistakes here only. But from those mistakes, we'll learn. And we'll not repeat those mistakes. Okay. Because somewhere deep down inside, there are some things which you are going to commit mistakes in. Okay. While solving, you'll come to know. Okay. Shall I move ahead? Sir, this section was there, no? This section. See. Same section. My favorite thing. Copy and then paste. Okay. So what I'll do now? I'll change few things. Now the things which I'll be changing them with purple color. Okay, purple color. So now the section will become not changed by purple color. I'll change by some different color, blue color only. Okay, a little bit dark. Now this section will be changed. Now the number of the section will be 40A3, which says that you are any person. You are any person. You have incurred any expense for your business or profession. So now you are incurring expenditure for your business or profession. And what is that expenditure? You know, salary. Understanding? The salary which was left out from clause 1, no? Why? Because it is getting covered in clause 3. Now this salary, you are making the payment of this salary. Salary is your business expense. You are giving salary to your employees. Yes or no? What if you are giving salary to your employee who is a resident? It is already covered in clause 1A. Subclause 1A. Yes or no? 40A IA covers all the expenses including salary paid to resident. Now this clause will cover only those salary which is paid outside India or to a non-resident. Sir, why did you erase foreign company? Because sir, foreign companies never get salary, huh? Salary is received only by individual and not companies. Okay. So now the payment of the salary happening outside India or it is happening to a non-resident. Sure, sir. Now pay attention. This salary, no, is a taxable income in the hands of this person. On that, he is liable to pay tax in India. Will he come to India? Can the government go there? So again, you are given the responsibility. Deduct TDS on such payment of salary. Yes or no? And deposit that TDS on or before the due date of filing your ROI. What if you don't deduct the TDS default? TDS default is made. What if TDS default is made? Come on, tell me. Then if you don't deduct the TDS, then 40A3 says that such salary payment, entire amount of that salary payment will be disallowed. Entire amount that salary payment will be disallowed. 100%. And what if second default is made? TDS is deducted in the previous year itself, but not deposited on or before the due date of filing your ROI. So on salary, did you deduct TDS? Yes. But did you deposit on or before the due date of filing your ROI? No. Then also 40A3 will be attracted. And 40A3 says that such salary payment on which the TDS got deducted but could not be deposited, 100% of that salary payment will be disallowed. Will you remember this? Everyone, 100% of that salary payment will be disallowed. Now what if later on you deduct and deposit? Gone. No proviso applicable. Once the salary will be disallowed, no, as per clause 3, permanently disallowed. Now, even if you rectify your default by later on deducting TDS or later on depositing the TDS, it will not affect. Once it is disallowed as per clause 3, it is disallowed, it is gone. So now this provision is very stringent. It is not going to give you any relaxation. But for other payments, whatever amount was disallowed can be later on allowed. Hello? Provided you rectify your TDS default. Yes or no? But here, once the TDS default is made, disallowance will be attracted. 100% of that salary on which you did not deduct TDS. 100% of that salary on which you deducted TDS but you could not deposit. 100% of that salary will be disallowed. Even if you later on rectify the TDS default, the amount which was disallowed here as per clause 3 cannot be allowed again, because there is no such proviso allowing such disallowed amount. So once this is disallowed, it is permanently disallowed. And 40A and IA, they are permanent disallowances or temporary? They are temporary disallowances. Till the time your default continues, the amount will remain disallowed. But the moment you will rectify your default, TDS default, the amount disallowed will later on be allowed. Got it, sir? Sure? 40A3 done. 40A3 done. 40A2 is also done. 40A5 is also done. Sir, we wrote these sections, no? We wrote these sections. 40A, 40A1 done, 1A done, 2 is done, 3 is also done, and 5 is also done. 4 is a time pass. 4 is a time pass, but still I will tell you. Okay? Don't pay a lot of attention. If you understand, then it is okay. Not understanding, I'll try twice or thrice. Okay? Pay attention. This is your 40A4. Can you see 40A4? Read it once. Read it. Employer is going to get deduction under section 36 subsection 1 clause 4 and clause 5 for this contribution. But clause 4 is saying that this deduction will not be given to the employer if the employer has contributed to such funds from where the amount received by the employee is taxable and TDS was supposed to be deducted at that time. But TDS can be deducted at that time. No arrangements are right now in existence. Wait. The amount is contributed by the employer. This amount was supposed to be taken as a deduction under this section. Clause 4, clause 5. You remember, no? Contribution to Provident Fund, contribution to ASF, contribution to Gratuity Fund. So whatever contributions are going to these funds, these are the expenses for the employer right now. Employer can claim the deduction under clause 4 and clause 5. Right now, the employer can claim. But this clause 4 is saying, employer cannot take these deductions for those contributions which the employer is making right now in such type of fund where the money is going right now. But from that fund in future, when the employee will get the money, that money for the employee will be a taxable amount at that time. So from that money also, TDS needs to be deducted at that time. But no arrangement for tax deduction then is made right now in this fund. Yes or no? Hence, whatever amount which is contributed right now in such type of fund, no, cannot be claimed as a deduction because it is contributed in a fund from where whenever the amount will be received by the employee, TDS needs to be deducted at that time. The TDS deduction, tax deduction arrangements are missing in this fund. Tax deduction arrangements are not made in this fund. So whenever that employee will get the money, on that the TDS will not be deducted. He will get the money without TDS. Hello? So ultimately we are going to lose, government saying. So if we are going to lose, you will also lose. Why are you contributing in such funds where you have not made any arrangements for tax deduction in future? Don't contribute there. If you will contribute in such funds, those amounts we are not going to allow you as a deduction. Hello, sir. Understood, no? Easy, no? Made easy. Say thank you. And now even if you don't remember, no problem. But wait, we have to remember these things also. Don't take any chance. Because in the examination, they will give you employer is contributing to RPF 20,000 rupees per month. 20,000 into 12, 2,40,000. Is it an expenditure allowable in the hands of employer? Yes. Under clause 4, the employer can take the deduction. So in the P&L account, debit side, it was written that contribution to RPF account 20,000 into 12, 2,40,000. So 2,40,000 reduced from the net profit. Yes or no? Net profit is also given. Now, for that item, a separate adjustment entry is given. Additional information is given. Additional information saying the amount which is shown above as employer's contribution to RPF. Contribution to RPF is assessee's contribution to RPF account of the employee. If that is only written, no, take the deduction under clause 36 subsection 1, clause 4. If only that much is given. But what these examiners will do, now they will not stop there. Additional information continued. However, amount coming from that RPF in the hands of employee in later on years will be subjected to TDS. But no arrangements for that tax deduction is made right now from that fund. Gone. Clause 4 is getting attracted. And because of that, even if it is the contribution made by the employer to RPF account of the employee eligible for deduction under clause 4, still it will not be allowed as a deduction under 36 subsection 1 clause 4 because here 40 clause A sub clause 4 is getting applicable. And as a reason of that, that contribution will be disallowed. Not to be deducted to calculate profit. Why have you deducted? Add back. Add back because of 40 clause A sub clause 4. Got it, sir? See, I am giving you a basic idea also that how these things will be appearing in the question. So be careful. Whenever you see such type of information, be careful. Okay. So this is the end of 40 clause A. Full clause A covered. All the clauses, all the sub clauses of clause A are covered. Now we are going to come to 40 clause B. 40 clause B. In this section, 40 clause B. The first point which we are going to discuss is about interest. Interest given by a partnership firm to its partners. See, there is a firm. Okay. Now this firm will give interest. This interest is either on capital or loan, which is given to this person who happens to be the partner. Meaning that the firm would have taken a loan from the partner, or the firm has taken capital from the partner. On that loan, on that capital, the firm is paying what? interest. So if we talk from the point of view of the firm, for the firm, this interest for the firm, this interest is what? This is an expense for the firm. And from the point of view of a partner, okay, this interest coming to the partner is an income to the partner. Now we'll talk about the partner a little bit later. First, let's have a discussion about this firm. Okay. So firm is paying interest to the partner. Is it an expense? The answer is yes. Now the first question is it allowable? Out of the PGBP income of the firm, can the firm take the deduction for this interest? The answer is yes. Out of the PGBP income of the firm can take the deduction of this interest. Why? Because see, there are two persons, separate persons in the eyes of Income Tax Act, income tax law. Firm is a different person and this individual partner is a different person. See, if that same interest on capital would have been given by the proprietor from his business to himself, would have been disallowed. But now, because see, in that case, the proprietor and the business, they are not different entities, they are the same entities. Okay. But in the eyes of income tax law, firm is a different person and partner is a different person. So, firm is making an expenditure for the purpose of business or profession which the firm is doing. And that expenditure is in the nature of what? Interest on loan. If this loan would have been taken from someone else, if this capital would have been taken from someone else, if this money would have been taken from someone else, the firm would have given the money to that person. Was it allowable that time? Yes. So why not now? Now also it is allowable. But it is an allowable expenditure to the firm only if two conditions are fulfilled. It must be authorized by the partnership deed. If the firm is paying that interest, which the firm is not authorized to pay only as per the partnership deed, then it is not to be allowed. It will be fully disallowed. Debited to P&L, net profit is there. Hello? Add back to the net profit will not be allowed as a deduction. Why? Because it was not authorized by your partnership deed. But if the partnership deed authorizes the payment of this interest, and as per the authority given by the partnership deed, the firm is paying, only then it will be allowed as a deduction. Yes or no? Now please wait. How much interest the partnership firm can pay is also given in the partnership deed. Firm can pay should be given in the partnership deed. And how much the firm can pay will also be given in the partnership deed. If the deed says that firm should pay 20% interest on capital or loan, deed can also mention that firm can pay 15% interest. Deed can also mention that partnership firm can give 50% interest. Deed can mention any percentage, yes or no? Hello? But whatever percentage, whatever rate of interest given in the partnership firm, the Income Tax Act will not allow that much. There is a limit on that interest which the partnership firm should pay. And that limit is 12% rate of interest. How much? 12%. Meaning that any interest which is authorized by the deed will be allowed. If it is authorized by the deed at a rate which is 12% or less, and that interest is given, will be fully allowed. But what if the deed has authorized to pay more than 12%? Then will it be allowed? No, it will be allowed to the extent of 12%. Any excess interest given will be disallowed. Yes or no, sir? Now, what if the deed is saying that pay 8% and 8% is given? Will it be fully allowed? Yes. Deed is saying pay 10% and 10% is given. Will it be allowed? Yes, it will be allowed. Deed is saying pay 12%. and 12% is given, then also it will be fully allowed. Deed is saying give 15% and 15% is given. Entire 15% will not be allowed. Only 12% will be allowed and excess will be disallowed. Getting my point? Hello, sir. Now pay attention. Deed is saying give 10%. Sorry, if the partnership form is giving 10%, will it be allowed? Will it be allowed? No, fully disallowed because it is not written in deed. See, whatever rate of interest, if it is 12% or less or more, whatever interest paid will be fully disallowed if the deed does not authorize. So, the expense in the hands of firm. Firm can claim what deduction of such interest only if it is authorized by partnership deed and maximum to the extent of 12% per annum rate. Done, sir. So now conclusion of this discussion. Wait, tell me. If the interest given, whatever rate, but it was not authorized by deed, fully disallow, add back to the profit. So what would have happened? Profit of the firm will be calculated. So in the P&L account of the firm, the interest is debited. Interest on capital, interest on loan. So it will appear like this. See, this is the P&L account of the firm. Okay, this is the debit side, this is the credit side. So here many incomes will be given and here many expenses will be given and there will be net profit. Some amount of net profit will be there. And here it is written interest on capital or loan. Okay. Now, for example, if this interest on capital or loan was 1.2 lakhs, or I can say it is 1.8 lakhs. Example 1.8 lakhs. Meaning that 1.8 lakh of interest is reduced to calculate this profit. Now you have to see if it is allowed, then don't add back to the profit. Yes or no? But if it is not allowed, I will have to again add back this 1,80,000. So first ask yourself, is this interest given by the firm? Yes. If it is given as per partnership deed, no. Partnership deed was not telling you to give this interest. Then why have you given? Why have you debited? Why have you reduced to calculate your profit? This should not be reduced. This should not be allowed as a deduction. Disallow. And if it is disallowed, meaning that it was reduced from profit, not to be reduced, add it back. Entire 1,80,000 will be added back. Hello, sir. Now, if this 1,80,000 was authorized by deed, then allowed? Then allowed, no. But wait, this 1,80,000 should be at a rate which is 12% or less. Only then it is fully allowed. But what if it was given that this interest is given at a rate of 18%? So this interest is 18%, no? How much should be allowed? 12%. So if at 18% 1,80,000 is given, how much should have been given at 12%? 1,20,000 only. Meaning that entire 1,80,000 is not allowed. Only 1,20,000 out of this is allowed. Excess 60,000 given, no, which is more than 12% will be disallowed. So I will have to do two splits over here. Two splits. One split 1,20,000 up to 12% allowed. Second split 60,000 excess amount disallowed. So how much I will add back to the profit? 60,000. because 60,000 was not supposed to be reduced. Why have you reduced that? Add it back. If you understand this treatment, everyone, another treatment, see, another way of solving this. 1,80,000 is given at what rate? 1,80,000 is given at 18%. 18% interest allowed or not allowed? Not allowed. Add back 18%. This entire 1,80,000 add back to the profit. How much interest should be given? 12%, 1,20,000. Is this allowed? Is this allowed? But it is not recorded. So do one thing, reduce 1,20,000. Add 1,80,000 because it is not allowed. How much is allowed? 120, but that 120 was not recorded, so I will reduce it separately. Net effect 60,000 automatically added. This way also you can present. Hello? So do whatever way in which you are comfortable, but ultimately 60,000 will be added back to the profit because that 60,000 was interest in excess of what? In excess of 12% rate. Even if it is authorized by deed, will not be allowed as a deduction. Whatever interest the deed will authorize should be 12% or less. That will be fully allowed. And whatever interest the deed is authorizing, if that is more than 12%, so any excess over and above 12% will be disallowed, will be added back to the profit. That's it. Sure, sir. This is interest in the hands of firm. In the hands of firm. Now we will discuss about partner. But before that, I will first complete this part. Okay. This was just given as example. Therefore, interest not authorized by partnership deed. What you will do? Cross, disallow. Sure. Therefore, interest authorized by partnership deed. But if it was up to 12%, then fully allow. And if authorized by partnership deed more than what? 12%. What you will do? Two splits. Up to 12% will be allowed and excess will be disallowed. Got it, everyone? Okay, now let's talk about partner. For partner, is it an income? Sure. What if the partner is showing the entire amount as his income and pays tax on the entire interest? Don't you think that the interest which was disallowed to the partnership firm was already added back to the profits of the firm? On that amount of income, the firm has already paid tax. Now, if that amount is also shown by the partner as his income, so one income getting taxed twice, once in the hands of firm because it was disallowed, and that same amount if the partner is also receiving, for partner also it is becoming income and it is getting taxed. So for the partner, what they are saying that partner shall show the amount of interest as his taxable income under the head, fill in the blanks. Under which head partner will show this amount as his income? Salary, no? IFOS, no? IFOS. Firm is my business, and whatever my business gives me has to be my business income, even if it is my interest on loan, interest on capital will not make any difference. Anything coming out of my business is my business income. So for partnership firm is his business only, no? Hello? So whatever the firm will give to the partner will always be PGBP income in the hands of partner. Even if it is interest on loan or capital, will not make any difference. It will always be treated as what? PGBP income. So the partner will show the amount of interest as is taxable income under the head PGBP only to the extent allowed as deduction to the partnership firm. Now what do I mean by that? Whatever interest which was allowed to the partnership firm, that interest got reduced out of the profit of the firm. That means on that much amount of income, the firm has not paid tax. You make that as your income and you pay tax on that. Meaning, whatever interest which was disallowed in the hands of firm, the firm has already included that amount in its income and paid tax on that. You don't show that amount as your income now. So interest allowed to the firm will be taxable for partner as his PGBP income. Interest disallowed to the firm will not be treated as income only by the partner. Hello, sir. Because the interest which was disallowed to the partnership firm was already added to the profit of the partnership firm. To that extent of income, the partnership firm already paid tax. Now you don't consider that amount as your income, because if you will consider that amount as your income, again the same income which already got taxed in the hands of firm will be taxed for the second time in your hands. Don't show that as your income only. Ignore that. But wait, that interest which was allowed to the partnership firm reduced that amount out of its profit. That means to that extent the profit was reduced by the partnership firm. To that extent the income was not taxed in the hands of partnership firm. To that extent you show as your income and you pay tax. Under which head? PGBP. So this is given under section 28, specific charge. Do you remember? In specific charge we left a few things. Out of those few incomes which we left, no, this was one of the income which I told you that we are going to do with section 40 clause B, which I am doing right now with you. So if you are a partner in a partnership firm, if you are a partner in a partnership firm, are you receiving interest on capital or interest on loan from the partnership firm? Yes. That is going to be always taxable in your hands under the head PGBP only, specific charge, but only to the extent which was allowed in the hands of partnership firm. Full stop. Meaning that any interest which was disallowed in the hands of partnership firm is not equal to income for the partner. So if that is not your income only, what you will do? Ignore such amount. So how much is your income? Only that which was allowed in the hands of firm. That is your income. And where you are going to charge? You are going to charge under the head PGBP only. No other head. Under the head PGBP. That is your business income, specific charge. That we cannot consider return on your investment. That is your business income. Your business is giving you this income. Understood or not? Everyone, should I move ahead? This was the one payment given by partnership firm to the partner. There are two more payments which we are going to do now. Now the next payment which I am going to do is remuneration. Then I'm going to tell you about the share of profit. So interest on loan or capital given by a partnership firm to the partner. This is done. Now second income which we are going to do is what? A partnership firm is giving remuneration to its partner. Remuneration means what? Salary, bonus, commission, etc. Everything other than interest on capital or loan which is given by the partnership firm to the partner and debited to P&L account is what? Remuneration for the partner, like salary given to partner, then bonus given to partner, commission etc. given to the partner, all such things which are coming prior to profit but other than interest. Yes or no? But wait. Can a partnership firm give something to the partners after the profit? What is that? Share of profit. That we are going to discuss little later. Don't worry. But first, let's discuss about a firm is giving remuneration. Remuneration covers all the things other than interest. Okay, no? Salary, bonus, commission, etc. Everything. Now this remuneration is given to whom? It is given to the partner. So, for the partnership firm, isn't it an expense? For the firm it is an expense, but for you it is income, no? So this remuneration for the firm and for the partner, for you it is income, and for partnership firm it is an expense. Now let's talk about the partnership firm first. Wait, the firm is giving this remuneration. Will it be allowed as a deduction to the partnership firm? Fully disallowed if not authorized by deed. Deed is not telling you. Why are you giving then? Is your deed mentioning to give? No. Then why are you giving? It must be. What? It must be authorized by deed. So firm can take what? Deduction of such remuneration only if authorized by partnership deed, meaning that whatever remuneration which is given but it was not authorized by partnership deed, fully disallow, fully. Okay, but whatever remuneration which is authorized by deed is allowed, fully allowed. No. Now there will be a catch. Again, another condition. Now if the deed is authorizing and the remuneration is given, deed is authorizing and the remuneration is given to a partner, will that remuneration be allowed? Yes. But for that, partner needs to be a working partner, because deed can authorize to give to a non-working partner also. The partner who is not working, even he should get the remuneration the deed may authorize. So any remuneration, whether authorized by deed or not authorized by deed, given to a non-working partner will never be allowed. It will be disallowed. But any remuneration which is authorized by the deed and given to the working partner only can be claimed as a deduction. Yes or no? So, authorized by the partnership deed and given to a working partner. So firstly, it must be authorized by deed. Secondly, it must be given to a working partner. Only then it will be allowed. But wait, the firm can say to the working partner give 40,000 per month. The firm can say to the working partner give 50,000 per month. The firm can say that pay remuneration amounting to rupees 5 lakhs to the working partner. Deed can authorize any amount, no? Deed can authorize any amount to be paid to the working partner. So will the Income Tax Act allow the entire amount authorized by deed to working partner? No, there is a maximum limit here also. So whatever remuneration given to the partner must be authorized by deed. It must be given to a working partner and shall be within the maximum limit prescribed under section 40 clause B. What did I say? Prescribed under section 40 clause B. Now how much maximum interest can be given? The rate was directly given, no? 12%. You are not supposed to calculate that rate. The rate was directly given. Here, no. How much remuneration can be given to the working partner? How much remuneration can be given to the working partner? The maximum limit is given in 40 clause B, but that you will have to calculate. Understanding? Now this maximum limit will understand that how to calculate. So for this, what I'll do? Maximum limit hashtag. That we are going to calculate. Pay attention now. I'll ask you a few questions. You're supposed to give me the answers, okay? Number 1. Remuneration paid to. Remuneration beta not authorized by partnership deed. Will it be allowed or it will be disallowed? Completely disallowed, whether given to working or non-working any partner. Even if given to working, then also not allowed. Even if given to non-working, will not be allowed. Getting my point? Because it is not authorized by deed. Full amount add to the profit. Add to the profit of the firm if it was reduced. Hello? And if it was not reduced, no need to reduce also. Because even if you reduce, you will have to add it back. Getting my point? Now pay attention. Remuneration. This was the first point. Okay, no? Now, remuneration is authorized by partnership deed. Will it be allowed? Yes, only if given to working partner. So if it is authorized by deed and given to working partner, only then it will be allowed. What if it is given to non-working partner? So even if the deed is authorizing, given to non-working partner will not be allowed as a deduction. Sure, sir. Now what if it is given to the working partner? Will it be allowed? No. Authorized by the deed, given to working partner, will be allowed? No. Now this is given up to maximum limit under section 40 clause B. Then fully allowed. Because you are giving an interest which we are telling you to give, or you are giving less than that. We will allow fully. Hello, sir. But what if it is given to the working partner and the amount given to the working partner is more than maximum limit under section 40 clause B? What you will do? So out of this, up to maximum limit of 40 clause B, it will be allowed. And any excess amount over and above that limit will be disallowed. Did you understand this thing? Sure, sir. Pay attention. Now, how to calculate that maximum limit, that we are going to see now. But first question, 40,000 remuneration is given. Example I am taking, this is the P&L. Okay. In this P&L, this is the debit side. This is credit side. Many incomes, many expenses. And here it will be net profit. Some amount will be net profit. Okay, no? Now here, no, they are giving salary. Salary means remuneration to working partners. And the amount of that salary, see how many working partners are there. Example, 2 working partners are there. For every working partner, the salary given is 50,000 per month. So 50,000 per month for both the partners for 12 months. So 50,000 into 2 will give me 1 lakh. 1 lakh into 12 will give me 12 lakhs. So the total salary which was debited here was 12 lakhs. Total salary which was debited here was 12 lakh. Ask yourself a question. First question. Is it authorized by deed? No. So even if it is paid to a working partner or non-working partner, will be disallowed. Add back to the profit. That's it. Sure? Because it was reduced from profit. So now you'll have to add back because entire amount is disallowed, not authorized by deed. What if it was authorized by deed and given to a non-working partner? Then also add back full amount. Now, if it was given to working partner, authorized by deed and given to working partner, now will it be allowed? Yes, but to the extent of limit. Now you'll have to calculate the limit. For example, you calculated the limit and limit came 15 lakhs. Are you paying 15 lakhs or less than that? Yes, fully allowed. No need to add back. Hello, sir. But are you paying 12 lakhs? Yes. And the limit was only 10 lakhs. You should have paid 10 lakhs only, no? Why have you paid 12 lakhs? So out of this 12 lakh, 10 lakh which is allowed, we will allow. 10 lakh which is maximum limit, to that extent we will allow. Excess 2 lakh paid, no, is not allowed, disallowed. Add that 2 lakh back to the profit. Or do one thing, add back the entire 12 lakh and reduce 10 lakhs. The effect will be same. Hello, sir. How much allowed? 10 lakh, no. Is it recorded? No. So reduce it. How much given? 12 lakh. Is it allowed? No. So add back. Understood? Or do one thing, split this into 2 parts. 10 lakh which is allowed should be reduced. Should be reduced. Don't add back. 2 lakh which is disallowed should be reduced. No. Then why have you reduced? Add it back. That's it. Anyways, either you follow this method or this method, your answer will be same. Net 2 lakh will be added. Got it, sir? Sure. Now, how did you calculate that limit, sir? 15 lakhs in the first case and 10 lakhs in the second case. Now that calculation we are going to see. Now that calculation we are going to see. Come on. We are going to see the calculation now. I am now calculating maximum limit of remuneration to all the working partners together. Yes or no? Under section 40 clause B. Now to calculate this maximum limit, no, first I will have to calculate book profit. Book profit of the firm. Because without this book profit, this limit cannot be calculated. First, I'll have to calculate that book profit. Now, what is this book profit? I'll tell you. Wait. See, the meaning of this book profit. This book profit means net profit of the firm as per PGBP provisions, which should be after claiming depreciation under section 32 and interest on capital or loan which is allowable up to 12%. Yes or no? So calculate the net profit as per PGBP provision. Ultimately, you are supposed to compute the PGBP income of the firm only. Hello? Now to calculate that PGBP income of the firm, what are you going to do? Take the PGBP income, reduce the PGBP expense, but don't forget to reduce depreciation as per 32. Reduce that also. Don't forget to reduce what? The allowable interest to the partners. Allowable interest to the partners meaning up to 12% interest. That is allowed, no? Reduce that also. So the profit calculated after claiming all the expenses, including depreciation and allowable interest. But it should be before remuneration to the partner. Without reducing the remuneration, calculate the PGBP income of the firm. Hello? And that PGBP income which you have calculated, no, without reducing the remuneration, the net profit should be before remuneration. Meaning that don't reduce remuneration. If you have already reduced, add it back. And whatever net profit will come, no, that net profit is your book profit. So what they are saying? Net profit of the firm. Whose net profit? Firm. As per PGBP provision. But this should be after depreciation and interest. But it should be before remuneration. In short, if in the net profit everything is reduced, depreciation should be reduced? Yes. As per section 32? Yes. Reduced, no? Okay. We were supposed to reduce only. Hello? Interest is also reduced. Hello, sir? To be reduced? Yes. Reduced. No need to do anything. But wait. The interest was reduced at a rate more than 12%. How much should be reduced? 12% only, no? So do one thing. Excess interest add back. Because that is not an allowable interest. Yo, to calculate net profit, you reduced remuneration also. Who need to reduce? Add it back. Without reducing the remuneration, whatever profit will come, no. After taking depreciation also, after taking allowable interest also, but without reducing the remuneration, whatever profit, PGBP profit of the firm will come, no. That only is book profit. What if depreciation was not reduced? Reduce. What if interest was not reduced? Reduce, but only allowable. What if remuneration was not reduced? No need to reduce. Thank God it is not reduced. Without reducing remuneration only we are supposed to calculate the book profit. Getting my point? Very important to calculate this amount. If you calculate this amount, easy. Now you are not supposed to do anything. Now take that book profit which you have calculated. Take that book profit. Out of that book profit on the first 6 lakh. First 6 lakhs of the book profit, calculate 90% or 3 lakh rupees, whichever is higher. So if the book profit is up to 6 lakhs, if the book profit which you have calculated for the firm is up to 6 lakhs, so whatever book profit you have calculated, take 60%, take 90% of that. 90% or 3 lakh, whichever is higher. Sir, the book profit of the firm is 5 lakh rupees. Sir, book profit of the firm is 5 lakh rupees, sir. So 5 lakh into 90% will be how much? 4 lakh 50. 4 lakh 50 or 3 lakh, whichever is higher. 4 lakh 50. Sir, the book profit of the firm was only 4 lakh, sir. No problem. 4 lakh into 90% will be 3 lakh 60. 3 lakh 60 or 3 lakh, whichever is higher. 3 lakh 60. Sir, book profit of the firm was only 2 lakh, sir. Only 2 lakh. 90% of 2 lakh will be 1 lakh 80 or 3 lakh, whichever is higher. 3 lakhs. Sir, the book profit was only 1 lakh, sir. 90% of 1 lakh will be 90,000. 90,000 or 3 lakh? 3 lakh. Whichever is higher, 3 lakhs. Hello? Sir, I calculated book profit, but it is not coming book profit, sir. It is book loss. So calculate 90% of book loss, no? 90% will be a negative amount only. Negative amount or 3 lakh, whichever is higher. 3 lakh will be definitely higher. Understanding or not? Come what may, the maximum limit will be at least 3 lakhs, not below that. So remuneration to all working partners payable together. Hello, the total amount of remuneration payable to all working partners, maximum limit cannot be less than 3 lakhs. Understanding? It can be more than 3 lakhs, but it can never be less than 3 lakhs. In all the cases, it will be 3 lakhs or more, 3 lakhs or more, 3 lakhs or more. Understanding? But wait, here you have calculated that book profit is 6 lakh or less. What if, sir, book profit is more than 6 lakhs? Then do one thing. For the first 6 lakh of book profits, you are supposed to calculate 90% or 3 lakh, whichever is higher. And on the balance book profit, balance book profit, meaning the book profit over and above 6 lakh. Yes or no? Take 60% of that. So this amount as well as this amount, add both the amount, you will get the total allowable remuneration, total maximum remuneration. Yes or no? For example, the limit, for example, the book profit was 18 lakhs. Come on, tell me, book profit was 18 lakhs. Is the book profit more than 6 lakhs? So what you will do? Out of 18 lakhs, on first 6 lakhs, you will take 90%. That will be 5 lakh 40,000 or 3 lakh, whichever is higher. So here it will be 5 lakh 40,000. Everyone getting this? And how much is the book profit over and above 6 lakh? It is 12 lakhs. Take 60% of that. And that will be 7.2 only. So this 7.2 plus this 5.4 will give you 12 lakh 60,000. This is the maximum. See, if the firm is earning a book profit of 18 lakhs, no. So this says that out of that book profit, to all the working partners, the firm can give maximum remuneration how much? 12 lakh 60,000. That is the maximum limit. Now you will have to check that how much remuneration firm is actually giving. Is that remuneration up to 12 lakh 60 or less than that? Fully allowed. But if the remuneration actually given by the firm is more than this 12 lakh 60, up to 1260 will be allowed, excess will be disallowed. Getting my point? But wait, sir, what if this amount was only 9 lakhs, sir? So this remains same. You just have to change this. Anything over and above 6 is how much? Here it will be 3 lakhs. 60% of 3 lakhs will be how much, friends? 1.8 lakhs, no? 1.8 plus 5.4 will give you 7.2 lakhs. 7.2 only, no? So if the book profit of the firm is 9 lakhs, then the firm can give maximum 7 lakh 20,000 as remuneration to all its working partners together. Getting my point? Sir, what if the book profit is only 4 lakhs? Then this calculation will not happen only. On that entire 4 lakh, calculate 90%. Will be 3 lakh 60 or 3 lakh. Whichever is lower, 3 lakh 60 will be the limit. That's it. Got it, sir? Sure, sir. Will you be able to calculate the book profit? 40 clause B, no? Earlier this limit used to be, here it used to be 3 lakhs and this used to be 1,50,000. And any book profit over and above 3 lakhs, 60%. This limit has been changed in this year, doubled. This is Finance Act 2024 amendment. Earlier, the limit was only 3 lakhs. Up to 3 lakh of book profit, 90% or 1,50,000, whichever is higher. Now, both the things have been doubled because that limit was very old limit. Okay. And that limit was not changed since a very long time. And now considering the fact that from these many years, the limit has not been revised. Now see, many partnership firms have opened. They are growing also. And they are paying a decent amount of remuneration to their partners. Now the partners are not happy with a small amount of remuneration. Yes or no? So the partnership firm and the partnership deed has to provide a higher amount of remuneration. Now even after giving that higher amount of remuneration, the majority of the component gets what? Disallowed, because the limit was only 3 lakh. 3 lakh 90%, and anything over and above that used to be what? 60%. So limit used to be very less. So the remuneration, major part of that remuneration used to get disallowed. So the firms were repeatedly telling the government that government, please do something, please enhance the limit, please enhance the limit of 40B. Since many years the government was not listening only. This year they have listened. This year they have revised the limits, they have doubled the limits. Got it, sir? So 3 places amendment are there. Will you remember? Now the last point I'll discuss and then we are going to solve the questions. Last point, okay? Last point is, if the firm has given share of profit to the partner. So for example, if we all are the partners in a firm, okay, all of you all are having 10% share of profit, yes or no? Akshay is having 10%, Kaushik is also having 10%, Raj Lakshmi is also having 10%, Kanu is also having 10%. So all of you all taken together 50%, and the balance 50% is mine, because I have invested more capital. So definitely I am going to demand more what? Share of profit. Half of the capital is invested by me only. Half or more than half I would have invested. So I would definitely take proportionate share. Okay, no? So now tell me. Now the firm has earned a profit of rupees 50 lakhs. How much? 50 lakhs. Is it a profit of the firm? Don't you think on that entire profit the firm will pay tax? Firm will calculate the PGBP income. So firm's profit is already taxed in the hands of the firm. Now out of the taxed profits, the firm is giving us share. Now just imagine if this share is also treated as our taxable income. Don't you think that on a single amount on which the firm has already paid tax, now coming to us in the form of what? Share of profit, we will also have to pay tax for the second time. Should we pay tax on that same amount for the second time? Is it good for us? So what the government says, whatever share of profit coming to the partner, no, that share of profit in the hands of firm already taxed in the hands of the partnership firm, because partnership firm is a separate entity, yes or no? So if that share of profit which is already taxed in the hands of the partnership firm, this should not be taxed again in the hands of the partner. So for the partner, it will be fully exempt income under section 10 2A. There is one section 10 2A. As per section 10 2A, the share of profit coming to the partner will be fully exempt income in the hands of partner. Please don't show this amount as partner's taxable income under the head PGBP. This is not taxable because this is fully exempt. What is taxable in the hands of partner? Only the interest coming to the partner, but to the extent allowed in the hands of firm, and also the remuneration. Now this part is remaining. Now tell me, partner is getting remuneration. So whatever remuneration partner is receiving from the partnership firm shall be treated as taxable income of the partner under the head, fill in the blanks, PGBP only, and under no other head it will go. It will come to PGBP head only. But under the head PGBP it will be taxable to the extent it is allowed as deduction in the hands of partnership firm. Only to that extent you will show your remuneration as your taxable income, but you will have to show it taxable only under the head PGBP. Specific charge is there under section 28. So under section 28, specific charge says that any interest on capital or loan or any remuneration received by a partner from its partnership firm will always be taxable for that partner under the head PGBP only. Specific charges there. But it will be taxable in the hands of the partner to the extent it was allowed in the hands of partnership firm. Because to that extent the firm has not paid tax, you show that amount as your PGBP income and pay tax. You pay tax on that. Meaning that whatever remuneration which was disallowed, added back to the firm's profit, on that you are not liable to pay tax. Don't show it as your income. Hello. So I will write down ahead any remuneration disallowed in the hands of partnership firm and received by the partner is not treated as his income only. What will you do? Ignore that amount in the hands of partner. Sure, sir? Easy or difficult? That's it. 40 clause B over. Now nothing remains in 40 clause B. Done, everyone? Now pay attention. We are going to solve one or two questions on this concept which we have just now learned. Yes or no? Come to the questions. Come to 11th. Illustration number 11. Hmm. 11th. Shall we? A firm has paid 8,50,000 as remuneration to its partners for the previous year 24-25 in accordance with its partnership deed. Can I say this is the actual remuneration given to the partner? Is your deed authorizing to pay this? Yes, this is authorized by the deed. Yes or no? And it has book profit of rupees 10 lakhs. See how good your examiner is. He is not telling you to calculate book profit. He himself has calculated that book profit. Now considering that book profit, what is the remuneration allowable as deduction? Come on. See, if they are saying that book profit, sir, book profit is how much, sir? Book profit is 10 lakhs, sir. Did you calculate or it is given in the question? It is already given in the question, sir. Out of this 10 lakh, on the first 6 lakh rupees of book profit, I will calculate 90%, sir. That is 5,40,000, sir. Either this or how much? 3 lakhs. Whichever is higher. So here it will be 5,40,000. How much is the book profit over and above 6 lakh? That is 4 lakhs. So on the balance 4 lakh, how much I will say? 60%. That will be 2,40,000, sir. 2,40,000 plus 5,40,000. Therefore, maximum amount of remuneration as per section 40 clause B can be 7,80,000, sir. And remuneration actually paid as per partnership deed. How much is that, sir? 8,50,000. 8,50,000 will be fully allowed, no? Or only 7,80,000 will be allowed out of 8,50,000. So either this or this, whichever is lower. Therefore, allowable remuneration out of 850, how much will be allowed? 7,80,000. And excess remuneration, which is disallowed, will be how much? Out of 850, 780 is allowed. Then how much? 70,000, no? 70,000 will be disallowed. So in the profit of the partnership firm, 850, if it was reduced, I will add back 850 and I will reduce what? 780. Or I can directly add back 70. I can do that also. Very difficult, no question? You'll solve one more question. Come. After 11, come to question number 12. Rao and Jain, a partnership firm consisting of two partners. How many partners? Two partners. Reports a net profit of rupees 17 lakhs before deduction. They are saying before deducting all these three items. Yes or no? Now that net profit, if nothing is given, no, I will assume that the net profit given for the firm 17 lakh is calculated as per PGBP provisions. Hello? If nothing is mentioned, I will assume that the net profit given 17 lakhs is calculated as per PGBP provisions. That is not net profit as per books of accounts. That is net profit as per PGBP provisions. Now that net profit is before claiming these three amounts. That has to be after depreciation, after allowable interest, but before remuneration. So remuneration is not reduced and you are not supposed to reduce also. Okay. But depreciation is not reduced. You will have to reduce the depreciation. Interest is not reduced. You will have to reduce the interest. But interest is 15%. Don't reduce 15%. Reduce only allowable interest. Yes or no? So tell me, 40,000 salary per month to each working partner, meaning that 40,000 per month into two partners into 12 months will give you 9,60,000 actual remuneration given to the partners. 9,60,000 is the actual remuneration given to the partner. Is it reduced out of 17? No. So no need to reduce also. To calculate book profit, remuneration need not be reduced. Okay. And 1,50,000 depreciation. See how good these people are. They are not telling you to calculate the depreciation. They have themselves calculated and given it to you. If I would have been your examiner, I would have given you the details of assets, blocks, assets bought, assets sold. Yes or no? One block, no, I would have given 2-3 blocks. It's at least computer, plant and machinery, furniture, everything. So you get stuck over there and you forget what you are actually doing. You are calculating the depreciation as per section 32, which is to be allowed to calculate the book profit. So the examiner will always try to do such things. Okay, no? So right now you are very lucky that the depreciation they have themselves calculated and given it to you. But you can be made liable to calculate that depreciation also. Be ready for that. And you know how to calculate that depreciation. Okay, no? So I will reduce this amount. And I will also reduce interest, but which is at 15% per annum. And the amount of capital eligible for interest is 5 lakh. My dear friends, 5 lakh is not interest. 5 lakh is the capital on which 15% interest is given. So the interest actually given is how much? Interest actually given is 15%, which is 75,000. Tell me, is this 75,000 allowable or only 12% is allowable? So I will calculate 12%. 12% should be 60,000. Yes or no? 75,000 was the interest. You have not reduced. Thank God you have not reduced. If you would have reduced 75,000, you would have to first add it. And you have to reduce only the allowable interest. Getting my point? If they would have given in the question that interest already you have reduced while calculating 17 lakhs, interest you have already reduced. So how much interest you would have reduced? 75? No, you would have to add it back. And then calculate 60, reduce 60 separately because that is only the allowable interest. Got it, sir? Now, if the interest is not reduced, they are saying that the profit given is before claiming this interest. So you are safe. That 75,000 you have not reduced because it was not to be reduced also. How much is to be reduced? 60. Now reduce that 60. Getting my point? So tell me, on your calculator, if you take 17 lakhs, out of that, will you reduce remuneration? No. Will you reduce depreciation? Yes. Will you reduce interest? Yes. But only the allowable one, not this one. So how much book profit you are getting on your calculator? 17 lakh minus 1 lakh 50 minus 60. 2 lakh 50 you will reduce. Sorry, how much you will reduce? 60 plus 150, 2 lakh 10,000. 2 lakh 10,000 if you will reduce out of 17, you are going to get 14 lakh 90,000. My dear friends, they are telling you to calculate book profit. Have you calculated your book profit? It is 14 lakh 90,000. Okay. Now, based on this book profit, they are telling you to calculate what? Allowable remuneration. What did I say? Allowable remuneration. Meaning that first you are supposed to calculate book profit. Book profit you have calculated. How much? 14 lakh 90,000. Yes or no? So I will write down 14 lakh 90,000 was your book profit. Out of that, on the first 6 lakh, you will calculate 90%. That is 5 lakh 40 or 3 lakh, whichever is higher. 5 lakh 40 is fixed. Now, how much is the remuneration over and above 6 lakh? It is, sir, 8 lakh 90,000, sir. 8 lakh 90 only, no? 60% of 8 lakh 90. 60% of 8 lakh 90 will be 5 lakh 34,000, sir. Now this 5 lakh 34,000 plus 5 lakh 40 both taken together will give you 10 lakh 74,000. this is 10,74,000. Can I say this is the maximum amount of remuneration which you can claim? So here I will write 10,74,000. Okay. Now this 10,74,000, how much actual remuneration you have paid to the partners? 40,000 into 2 into 12 is 9,60,000. Now tell me, whichever is lower, lower is 9,60,000. Is there any interest which will be, is there any remuneration which will be disallowed? The answer is no. Because the entire remuneration you are paying is within the limit of that 10,74,000. Fully allowed. Nothing will be disallowed. See, I just have to know the format. I just have to put the amounts. Now, should I give you one more question in this? In the same question, if they tell you to calculate the taxable PGBP income of the firm. Come on, calculate. What should be the taxable PGBP income of the firm? Taxable PGBP income of the firm. Very simple, sir. Very simple. Whatever remuneration which you have calculated right now, no, allowable remuneration. From your book profit, reduce that amount, you are going to get the PGBP income of the firm. Or do one thing. What is this net profit of the firm? If nothing is given, it is assumed as per PGBP provisions. So as per PGBP provisions, what was the net profit? 17 lakhs. Now to calculate the PGBP income of the firm, you will have to take the deduction for what? Interest on capital. And that will be how much? 12% of 5 lakhs. Allowable interest. So it will be 60,000. Then less remuneration to partners calculated as above. How much remuneration allowable? Allowable. That is, sir, entire 9,60,000 is allowable. Because that was within the limit of 1074. Yes or no? So to calculate the PGBP income of the firm, this will be allowed as a deduction, no? So claim it as a deduction while calculating PGBP income. And one more thing you are supposed to claim as deduction. What? Depreciation under section 32. That is given. How much? Tell me. 1,50,000. Now take these all deductions and tell me how much is the total. 1,14,000. 17 lakh minus 60,000 minus 9,60,000 minus 1,50,000. How much is the final amount? 5,30,000. 530, no? That 5,30,000 is, please check properly, huh? This is the taxable PGBP income after claiming all deductions and allowable remuneration. This can be asked extra. So now please pay attention. In the examination, no, they will form a case study like this. In your MCQs, a case study will be made. In that case study, all these details will be given. Also the depreciation details will be given. Now 4 to 5 MCQs will be formed based on this case study. One from the point of view of the partner will also be made. These two and this extra, third. How much is the book profit of the firm? 4 options. How much is the allowable maximum limit of remuneration? Second, 4 option. Third, how much will be the taxable PGBP income of the firm? This one. And last but not the least, they will ask you how much will be the taxable remuneration in the hands of partner. Getting my point? 2 marks each. 8 marks. If you know this properly, no, you will score full marks. But if you don't know, and in that question, they are going to give you the details of depreciation also. And now they will give you one more. What? MCQ. In that they will tell you that what is the depreciation under section 32 allowable in the hands of partnership firm. So based on those details, they will check that whether how good you are in the depreciation calculations also. 4 options. 2 options will be very similar. Getting my point? Now, coming to the next part. See, 11th and 12th we have done, no? Now, see, there is one small discussion in 40A I and IA that I am going to do tomorrow. Okay? Please remind me of this. And illustration 9 and 10, no? You take it as a homework today. I want all of you to get confused. I'll be very happy to see your faces tomorrow after you have attempted those questions. Why? Because see, there will be 100% doubts in that question. I know. Because you don't know the TDS provisions yet. There are implications of TDS provisions also. So I want all of you to scratch your head for at least an hour in those 2 questions. Then when I'll start speaking about those questions, no, then I'll start teaching you those questions, solving those questions in tomorrow's lecture. No, you'll come to know, okay, this was the case. Then it will be remembered for a long time. So I want all of you to try these 2 questions at home today. I am going to solve these 2 questions. Don't worry. But I want all of you to try it. Question number 9 and question number 10. Okay. So tomorrow when we'll meet, we'll continue from here. And tomorrow, friends, the major chunk of this chapter will finish. Because now very small disallowances are remaining. Those we are going to cover. And the balance questions. So tomorrow, day after tomorrow, we'll try that this chapter gets over day after tomorrow. Okay. But major chunk of this chapter will be done tomorrow itself. Sure? So we'll meet in tomorrow's lecture. Till that time, bye bye everyone. Bye.